Hi everybody, Eddie here. Going to do a quick market update for next week. So last week we have a slightly bullish week, right? We had this test the week before at that gap resistance and fail. We came back and we had to retest this 3,900 area, which I suspect it would, and then it actually held, and we bounced off that level. So now we're still trending above the 8-day moving average right here, and now again we're right at this resistance level. This is the gap resistance here. There's a big gap that needs to be filled right here at 40.83. Last week was more of a light volume day because of the US Thanksgiving. So it was expected to have some sort of a consolidation week, but we actually end up going up quite a bit on light volume, right? Except for on Friday and the half day, we had more of an indecision day. So there was not enough volume to push through this area. So for next week, what I'm looking for is actually get this gap filled, right? It's very possible that we fill this gap, come up, retest this high, and then pull back to test this 200-day moving average to see if it'll hold, right? If that's the case, it will build more of a bullish case scenario where it goes up, fail this resistance, come back, retest the 200, and see if it holds. If it holds, we get our next leg up, right? But then we're going to test this 4,200, and then there's a gap right here that needs to be filled as well at 42.27, and then we'll go back to test some of these peaks on this side here, right? So that's a very possible scenario that can happen, but at this moment, this is the key areas to watch. This is also the upper part of this big megaphone channel that's coming down. So this area been failed the last 3 times already, right? So maybe fourth time's the charm. Maybe this time we finally break through it, right? So we'll know, we should know that by next week. If we get like another consolidation week, it's just going to drag this thing out a little too long, and if that's the case, then we're most likely going to reverse back down, right? So on the way down, 3,900 is this very, very key level to watch. So you see the arrow that I pointed there from before. This is the area we broke out. This is also the major support coming back down. So this area absolutely needs to hold in order for this trend to stay up. What if we fail this area right here? Most likely we'll come back and retest the lows, right? And the case scenario is we'll come back, and then we can actually go all the way down to test the lows of the megaphone pattern, which is brings you all the way down to 3,000, right? So there's a lot of bearish people out there looking for this big, huge leg down. I don't know if we're gonna get that this year. I'm more optimistic this year to get to break out of this, and then hopefully get like a Sandal rally this year, because it didn't come last year for sure, right? So this is the era everybody's watching. This is the era that everybody's expecting for a pullback. So whenever you get a lot of expectation to go in one direction, it tends to do the opposite. So just keep that in mind. And up here, you really don't want to swing too much. You can nibble at some stuff right now, and then see we actually break out of this thing, right? If we break out this thing, those stocks are going to fly. If it doesn't, if it gets rejected, most likely those other stocks is going to fail as well. So just keep that in mind. Keep your position pretty small if you're swing trading. Right now, I'm heavily concentrated on day trading. Although I did open some small swing positions last week, because the chart looked quite good after the bounce off the 3,900 area. So I was looking for this gap fill right here, to be honest, last week, but it didn't come. So we're gonna have to wait to see what happens this week. Right, we are a little bit extended away from the 8, so I do expect we get like a push up and then a pullback. Right, so as long as he pulls back and holds the 8-day moving average, we're fine. If he pulls back and then breaks through that, most likely he's going to come all the way down to test 3,900, and then if that does not hold, he's going to get our leg down. Right, so that's what to expect for for next week. Let's take a look at the weekly. So the weekly chart actually looks quite good. As you can see right here, we have a big up that week, and then we have that consolidation week to retest, and then we actually went straight up, engulfing the previous week, right? So that's a very bullish sign. And then last week we have that indecision week that we thought we were going to come right back down, but we actually end up holding. So now it kind of looked fairly bullish. So what you're looking for is a break of above the highs of last week and a continuation into this resistance area of 4100 or so, right? So if that's the case, then we could start end up going back up, and hopefully can possible break above this megaphone right here. But just be very careful that this could be a bull trap as well. We could break through it and then hit this major resistance at this 4150 area, and then get all the way come all the way back down, right? So there's the 50-day moving average right here as well on the weekly, and that's a very, very key level. And if you look through over here, there's major supply on this area right here, right? So that's pretty well the short-term targets up here. And once it gets up here, if you're swinging anything, I would take them off and just watch and see what it does, right? If it breaks through it, then add them back on, right? You can always add them back on, set stop below the breakout area, and then let it ride. But you definitely do not want to risk holding once you start hitting this area up here, right? Let's take a look at the Dow. So the Dow is very strong. As you can see right here, it's probably stronger out of the bunch. It is hitting that major resistance area as well. As you can see right here, peak supply area is this zone right here, and we'll see that next week. 350 right here is the area you're looking at right here. So what this is the previous peak. So we're slightly above that peak right there. Right, so that's a very good sign. It is very far away from the 8, so it's a little bit extended. If we get that one last push up, we could possibly hit that 350, maybe about that 355, and then come back and retest this area right here, this breakout area. If that's the case, then it'll create a more bullish scenario where it gets extended, pulls back, holds the breakout, and then continue higher. Right. So mid caps and small caps both look really good. As you can see, the charts are bouncing off this double bottom formation, and it is looking like a bottom formation for a breakout. And if it does break out, it's going to come all the way back up to here to the neckline. So that's would be the key resistance area right there to look at if it does rally all the way back up. This is the area that needs to break right here. Right above that center peak. That's what everybody will be aiming for on IWM. This is the mid caps. Mid caps are the same thing. It's aiming for the neckline up here around that 490, 500 area, and it's been holding this double bottom on the chart right here on the weekly. So this is a very important level to hold. If it fails this level, you can come down pretty quickly, right? So it looks like right now it's recovering quite nicely, and we are at the resistance level. So you're looking for a breakout of this area right here, and then a continuation higher into the end of the year, right? Let's take a look at the Qs. So the Qs are dragging the indexes down. It's the least performing index out of the bunch, and it's very surprising because usually if the market bottoms, tech tend to lead out of bear markets, but it's not doing that. It's actually dragging compared to the rest of the indexes. Mid caps are good. S&P 500 is doing well. Dow Jones is doing well. Small caps are doing well, but not the Qs. It's very, very surprising, and it's very unusual for something like that to happen. So you want to be very careful about this rally up. So if it does rally up in the if the Qs actually start pushing up with the index, it can really push the market back up, right? It could actually go all the way back up to the highs if that's the case. But if the market's going up, but tech is doing nothing, be very careful that about the rally. It's going to be short lived and it's going to come right back down pretty fast if that's the case, right? So you want to watch the cues very carefully. It does look like a basin pattern right here, but it's not moving too much. This is the area to watch, 295. Once it breaks 295, you're looking at 305 for the 200-day moving average, right? So it is very far behind from the rest of the bunch, and this is the area you want to watch very carefully. Is that 260? You want to make sure that holds in order to stay for a chance for it to actually break out of this downtrend and turn to a more of a bullish pattern. All right. If you look at the weekly, it's still a very defined downtrend, right? So it's still lower lows, lower highs. So there's no signs of the Qs actually reversing at all at the moment. All right, something interesting is the VIX. The VIX is at this very, very key support level. This $20 range is what changes the market in the past, I don't know, year or so, right? Every single time it hits this area, the VIX shoots about to about that 35-40 area, right? So this time, it's likely that you'll do the exact same thing. So you want to keep an eye on the VIX to see what's going on right here. Let's take a look at daily. So if you look at daily, you can see it more defined, right? Every single time it comes below 20, it shoots right back up. So if it comes back down to 20, maybe it's a good idea to buy some calls or even sell some puts on the VIX and see if it'll go back up to 35. If that's the case, most likely we're going to fail that 200-day moving average on the S&P 500, and then we're going to come back down and retest the lows again, right? If that's the case. But if it actually goes back below 20 and it stays there for a while, right, then the market can really shoot up towards the end of the year, and then maybe like early next year we get our drop after January effect, right? So if that's the case, then if seasonality works this year, that could happen, but last year's seasonality did not work whatsoever, so it could be another year of that as well. So you just want to keep a very close eye. As you can see, I already set my alert at $20 to see if it'll come back down and see if it'll hold around this area. This will pretty well give you the hint of if we're actually going to break out or we're going to get rejected and coming all the way back down. Is take a look at the VIX, see what it's going to do. All right. All right, let's see a comparison with the S&P 500. So this is SPYV. This is value stocks, and you see value stocks is what's leading the index up. All right, so we have this big, huge double bottom formation. We came all the way back up to this neckline now. All right, it seems extended, right? We're above the 200-day moving average already. So if it does pull back, it can come back, retest, and then go higher on the value. But take a look at the growth name. The growth is what's dragging the entire index down on the S&P 500 because it's just not moving. It's hovering around the same level. It's not budging off. It's just consolidating at the lows. So this really needs to catch up with the value names. And if this catch up with the value names, that's what's really going to push us up into the next leg, right? If that's the case, then we could see a big rally at the end of the year if growth is actually catching up with the value name, right? So at the moment, it's a lot of money is into the value. Maybe there'll be another rotation of money where people invest in the value, push it up a little too far up, and then they'll rotate back into growth, and then maybe growth will start outperforming the value, and that's really what I want to see. If that's the case, then the market will stay up, and it's going to push into the next leg up. So keep a close eye on this pair right here to see what's going on with the markets. One thing I want to look at is energy name. So energy name is right above the high here. This looks like a bull trap to me. But it is kind of like forming like a cupping handle as well. So you want to watch this zone right here. If it breaks below like the 21-day moving average, it could come back and retest the 50, which is at 84. So that could be a short opportunity. But if it breaks above this high right here, it's going to get like a big leg up, right? So there could be a pretty good trade right here if you want to trade energy. But as you can see, we're very, very close to all-time highs on XLE. So, even if it does push up, the next level up is around that 100, 102.50 area. So, it might be a good short if it does come down next week. Although that the oil prices are coming down, oil stocks are actually continuing to go up because the stocks actually still print a lot of money above $70 a barrel. So the stocks are going, the earnings going to keep going up with that because they do trade at lower valuations, and they were way oversold from before. So now that people are finally start pushing them back up because they're going to end up pushing it up to historic peak valuations before it'll start coming back down again. All right. Okay, let's take a look at some stocks. Apple, not much change. We have a consolidation week. This is like this area looks like it does look like it wants to come back down. Right here, it's looking like it wants to roll over, but we'll see. This is the box you want to take a look at. Below the box is bearish, above the box is bullish. So if it goes above the box, is most likely breaking 200. It's going to retest this 158, 160 area, and then hopefully it'll if that's the case, it'll run up to about that 164, 165 area. Right. But if it does come back down, it's going to retest this area right here, and this is a very important level to hold. If it breaks below this, you're looking at about somewhere around $100. You can come down all the way down to about $100 if that breaks. AMD, kind of like a short-term double top right here. It does form somewhat of a flag. Tops and flags are very similar. It looks like a cup and handle as well. So this is somewhat of a bullish pattern. So this is like a rounding bottom right here, and this is like your handle. So it could break out. If it does break out, it's going to test that $88, $90 area, but most likely it will get rejected around this area right here. All right. So keep an alert. If you want to trade this, just keep an alert above right here around that $80. If it breaks 80, it's going to go to like 85, 90. Right. So you could have like a short-term trade there if you really wanted to. Amazon, same as last week, Amazon broke this area, and it's super weak right at the moment. Still, we're looking around that $72 area. If it comes back down, you can see that this is a defined downtrend right here. There's no signs of bulls right here, so it's below the 8 and 21. Which will keep this thing down. There's a gap right here that still needs to be filled as well, so you can come back down. I would start buying a little bit here for a longer term, and then buy more down here than up here. Here, I would start a precision, maybe like a quarter precision or even 1/5 of a precision, and then just dollar cost average in for the longer term. On your you could buy this in your TFSA or RSPs or whatever for your longer term if you're in Canada. So that would be what I would do if I am buying this, is more for longer term, not for trade, because there's absolutely no trades here. Right, this $100 area is a major resistance. It needs to come back above 100 to show any kind of sign of life on Amazon. Otherwise, it's just going to keep going down till we hit 70. Right, so just make sure you understand that, and look for the break. Right, look for, if it comes down, if it breaks 85, it's definitely coming down to 70. Let's just say that, do it that way. But if it comes back up, if it breaks that 105, it's going to fill this gap at 110. right? So there's a couple trades, one on the downside, one on both side. You can watch it to see where it goes. You can set your alerts, right? You can set your alerts, and then when your alerts go off, then you can take a quick trade. Meta. So Meta, it's I did a little research on Meta, and it does look interesting down here. There's a gap that needs to be filled right here as well. It is a bit oversold. And if it does come down a little bit more, the high demand area is 75, right? So if it comes back down to about 75, I would buy something on a longer term. But you got to have a time horizon of like at least 5 years for this thing to really work out. You have to give it time because it will take time before they'll go back to the momentum that they had before, right? Because the way it's going right now, it needs to come down, it needs to base, it needs to let the 200-day come closer to the price, and then you'll start forming a bottom and then going back up. Right now, very early stages right now, so it could still have another leg down. And earnings is going to be a very key here. See what they're saying. And if it does run up, your target's only up here is at like 160, which is good. It's trading at 110, so 160, you'll make like a 40% move on that if it does run up. But you haven't traded above the 50-day that much. You can see right here, every single time it went above the 50, come right back down, right above 50, come right back down. So just keep a close eye on the 50, and you'll see if it goes back up, come back down and retest the 50 and holds, then you'll go for the 200, right? If it doesn't, then it's most likely just going to come back down, and then maybe we'll hit that $70 target. If it hits $70, maybe I'll throw some money into this thing. Right now I'm just watching it. I'm very interested, but I'm just watching it for now. Google, nice V-shaped bounce. You want to see it consolidate. You do not want to just see it to break 95, right? You want to stay above 95 for this thing to try to come back up. Maybe around above 100, right? Above 100, it may run up to 200-day moving average for a short-term trade, but this is a very key area to hold right here. If this thing fails, we'll come down to this range right here. So your buy zones, you can buy a little bit here, a little bit here, and then wait for this thing to bottom and then buy your way up. So that's how I would trade it. Right, Microsoft, same thing. Microsoft, it found support like a V-shaped bounce off this double bottom. Also, this major support right here. I don't think it'll fall below this 200. To be honest, it's very hard for Microsoft to do so. But if it goes above this 250, chances are it can run up to this 260, 265 region. So there could be a small trade there. And if I do trade this, I'll probably sell some puts or put spreads just to get some income off this thing. And I would sell them like probably down here. And then just grab some shares. If it does come down, like you can do this in the longer term and just grab the shares if you sell the puts. Or if you want to go for a trade, wait till it breaks above the high right here. It breaks above the high right here, go for 260 and then go for 265. Short-term trade. Netflix, still not gap fill yet. Looking for that gap filled. It's holding 821. It does look a little bit weak. So just keep an eye on it. There's your main support right here is around that 260. So he absolutely needs to hold 260 in order for this thing to continue to go up. And if it does hold, though, your target is 333 first, and then it's going up to $400 max at 400. So if he actually runs up to 400 and you're holding this thing, take your profits and then wait and see what it does. If you can go back above this area, then we could go and try to fill this gap right here. Most likely fail. Usually when on gaps, they always fail the first try around the gap, and then you'll come back down like this right here. Went up pretty close to the gap, you failed, and then you'll base a little bit longer, and then you'll start trying for the gap again. So it'll be a likely scenario right here too. So if we actually come all the way back up to 400, it can run up to about this gap area about 450, and then you'll come back down, test 400 base, and then we'll fill that gap if it does gonna go up, right? So this is more news driven. It's usually about their subs. If their subs are growing, they go up. If their subs are not growing, then it gaps down like it did every single time it has earnings. Right? So just pay close attention to that. See what they do after each earning. If they have a subscription boost, like they did like a new subscription with ads now for like $5.99 in Canada. So you know, if they pick up subscribers that way, then maybe this stock will come back. Nvidia, nice V-shaped recovery right here. So that ban selling to China is a big thing, but Nvidia said they're going to start building different chips that they can sell to China, so that helped boost the stock back up now. And it looks like it's going to test this 180 area. This is a key area to watch. This 180-190 zone, if it does run, that's your target. I would take my profits. I would set your stop right here below this 150, right? So if you're in it, have a stop at 150. It breaks 150, you're done. Just get out of the stock. But there's still a little bit of room to run. I would take profits probably around a little bit at 170, a little bit at 180, and then it goes up to 190. I'll take my full exit if I am in it already, which I'm not. I was watching it. I wanted to trade it. I think I did trade it for like a day or two as a day trade, but nothing serious on this thing. So it bounced off this high demand area. So that's a very good area to buy. If you do bought, you did quite well from that already. That's about 50% upside already on that. So these stocks tend to bounce very hard off key levels, especially when they sold off so much. So if it comes back down, comes back down to around this 130, that's an opportunity to go back in once again. Tesla. Tesla looks like it wants to come down. Honestly, it wants to come down to 140, right? It's below the 821. Every single time we touch the 21, it gets rejected. We're right around, we close above the 8. It's going to go for 21 again to see if it will make it. If it doesn't, expect the next leg down. It's going to make a lower low. The next lower low will probably end up around 150, 140 area. 150, 140, expect a bounce at that area, so you can sell some puts. Once you get down here, you can sell some credit spreads or puts. Grab some income. You can also do some short-term trading on the dead cat bounce off this level. So if it does come down, right, it's going to most likely come down like this. It's going to go up a little bit, come down, go back up, and then you can base here, and then you'll shoot back up, right? And so that's the what I think it'll look like for Tesla. So keep very close eye on this 140 area. If that area gets broken, you don't want to see that area broken, because the next level down is like $80 to $60. All right, so that's pretty much it for this week on updates. I did take a few trades on stuff that did look good. So I bought a financial stock last week for swing trade, Charles Schwab right here, because it looked like it was in a bull flag. So it was in a bull flag, and it broke out, right? So I did I'm in it. I have a slightly green on there, but it looks like it's pausing right here. So hopefully it's not a bull trap. This looks like a cup and handle pattern that broken out, and then now it's just formation. It hit the next leg up, and then that 85 is the area I'm looking at for taking some profits, and then possibly going up to 90 and 92 on this thing. But I wouldn't be surprised if it does pull back with the market. So that's my short-term trade. I do have a stop probably below 79.80 around there. So if it breaks below that, I'll be out of the stock. I'm also taking a swing on INMD. this stock right here because it's above the 200-day and all the other moving averages all stacked together right here. So they have like this little cup and handle pattern that failed. It got extended on the side here. And now it looks like another cup and handle type of pattern right here. So hopefully if he holds, we're going to test this 42.50. You see how this at my alert. And then if it breaks above there, we're going up to 50. All right. I'll be taking half off right here, and then I'll be taking another half off right here. So that's my target short term for a swing trade. And it's just based in right here around the 1821. I do have a stop just slightly below that, like 34.50, 34.45. That'll be the area where you want to keep a stop if you're trading this. I only got shares, so it's easy to handle. That's the only way I trade swing trade right now is with shares because it's so easy to manage. I just buy the stock, set my stop, and just not even look at it. Right. So that's what I've been trading. Let's take a look at the algo. Let's see. All right. So I am trading with the algo a lot lately, and I use the algo more for like confirmation than anything. So if you take a look at Friday, it was a fairly good trade on Friday. There's on the 5-minute chart, it was a buy right from the start. It went up, retest this for 250 resistance point. It didn't make it. We got the sell signal after breaking down the consolidation. You would have caught it all the way down, and then you got a buy signal near the closing, and then ran all the way back up. So that would have been that's on Thursday. Sorry, that would have been a really good trading day, and that was a really good trading day. It was very easy to trade. The range wasn't super big, but you can still make good money with it. Now, Friday was a very short day. The only trade right there was like the buy from this open, and then we during mid-afternoon we got our sell signal, and then slow grind down. So you could have made some money there. Shares would have been the way to go because if you did it with options, the afternoon the theta would have killed the trade because it wasn't a big range at all. It was a pretty tight range. So there wasn't a lot of things that you can trade off that, but a lot of this selling was done in pre-market. So if you caught that pre-market, that would have been a pretty good play. And on Wednesday was the good day. Wednesday, you have one buy signal and would have took you all the way up to the top, right? So that would have been a really, really good trade. There's about 50 points on SPX, 5 points on the SPY. So that would have been a pretty good money printing day. And on Tuesday was a lot more choppy. So like right at the open was just pure chop. So usually when that happens, you kind of ignore the signal. You kind of look for the range. So that was your range right here. So once the range is broken, then you can take the short. So right here, we did get a sell signal before it broke down. So you could have took the short when it broke down, and then you could have caught that. And then as it started basing right here, you get the buy signal. You could have caught that on the way back up to the highs, right? And then it did get a sell signal just before the close, right? But I would have just traded this breakdown on the opening range. And then I would have also traded this up on the break of the base on the bottom formation of the base and call it the way up. So you would have two really good trades there. And I think I actually did those two exact trades that day. And on Monday was a good day too. Monday was a big short right from the start. There's a little bit of chopping in the afternoon, and then during mid-afternoon, it sold. It got sold off, and then chop again, and then you get the rally into the close, right? So, the algo works really well when it's training, but when it's chopped, that's where you could get caught in some trades. But if you understand technical analysis, right, and apply that with the algo to confirm, then you get a much better probability of making money with the algo, right? So that's why I do, like, I trade levels, but I also use the aggro to confirm what the momentum is like, right? So if I see a basing pattern and then the aggro gives you a buy after the break up of the base, I'm going to stay in that trade till the aggro tells me to sell, right? Because when you're breaking out of a base, right, it's high momentum and there's quite a bit of demand to overtake supply in order to break out that base, right? So if it gives you a buy signal right before the breakout and then you caught it, you would have been a pretty nice ride up and you could have made some money. Sometimes in a day all you need is a couple of these trades, because if you caught that down move, that's quite a bit of money right there. You caught this up move, that's also quite a bit of money right there, right? So these on the SPX, they're like literally 50-point moves, right? So 50 points on SPX is a lot of money, because options right now, they like at the money cost you about 12 bucks. So 50 points would make you at least 4 extra money, right? So all you have to do is catch one or two of these trades a day, and you could have a really, really good day, right? Anyways, signing off. Make sure to like and subscribe to the video. If you're interested in the algo, I am offering the algo right now for free for my monthly subscribers, also my course members. So you want to give this a try, just sign up for a monthly Discord and you'll get the algo for free. Link is in the description below. I'll see you guys next week.